Hey everybody, John Tripolsky here from Teaching Tax Flow. Obviously, you're here on our YouTube channel or wherever you're watching these videos at. You've probably seen tons of the content we've done, but more importantly, here's a question for you. Have you listened to our podcast? And I'm going to find out if you haven't or not, because if you have not, you do not know this lady here that I'm about to talk to. Parker, how is it going? I know we had you on the show, the real Teaching Tax Flow podcast, not too long ago, but we have you back.
Yeah.
And now we're going to start having these quick little conversations because we get a lot of questions about them. So what a better place to do them here or I should say, than here on our podcast channels here on YouTube. But let's get into this one specifically. We were just talking about this before we hit the record button. And I love the way that you frame this, right? So I'm going to try to get it right because it's a little bit of a tongue twister because I don't say it every day. It's
Sure.
don't DIY your DTI. Did I get it right?
Yeah, you
All
got
right.
it exactly
I'll
right.
take it. I'll take it. So I know we talked about this very briefly on the podcast recording we did a couple months back, but give us kind of the overview on what you mean when you do say this, and then also like some of the things you see with the people that, go I call it the HGTV route of DIY everything. So give us a little background on that and then walk us through that.
Yes. So first of all, thank you for having me here. But so don't DIY your DTI means don't try to figure out your own debt to income ratio when it comes to lending. Um, and a lot of clients, especially investors and real estate investors, I'm guilty of this too. Like if I don't have to talk to somebody and I can figure something out on my own, I totally will, right? But the challenge when it comes to lending, and the reason this is nearly impossible is because there's so many different loan products. And these loan products each look at income or can look at income differently. So, for example, a conventional Fannie Mae Freddie Mac product, right? If we're looking at rental income of existing properties that you already have, there's a formula we have to use based on your tax return, your Schedule E, or if you file it on a business return. There's specific ways we have to look at that income and then can apply it towards the overall numbers, which is where the debt to income ratio comes from. Well, we have another product. It's a non-QM product. It just means it doesn't meet the federal regulations for how they want debt to income ratio to be calculated. And this product, you can still qualify with debt to income ratio, but if you have short-term rentals, we can do a 12-month look back on the gross rents and take 80% of that. So just in that one example alone, you can see the debt to income ratio could look very different.
Oh yeah. It's almost like people, in the real estate space, and I still do this, even though I make fun of people that do it. They get on there and they're like, oh, Zillow said my house is worth X.
Right.
I look at them, I'm like, you're crazy.
Yeah.
That's wrong. But then, 2 days later, I'm doing the same darn thing. So it's one
Right.
of those things, right? Where
Wow.
I do feel that and you've probably, obviously you see it more than I do, of course, but yeah, that debt to income, it's kind of like at least for myself, I kind of always have a mental gauge on where it's at, but it's just that, right? I mean, I could be like plus or minus 35% on any given day, however I'm feeling.
Totally.
If I'm feeling good about myself, it's looking really good
Yeah.
that day. But then I like how you mentioned that too. There's different products in place that look at it differently, right? So it's almost like what would be a good comparable? I think I should know this. The credit score bureaus, right?
Mhm.
Like they have different is Advantage scores is what they go off of, where that's kind of it could be drastically different, but it's just how they're doing it, right? Is it somewhat similar to that?
A little bit. So, that one's a little less technical. So for mortgage credit, I think you're talking about the mortgage credit score being different than the FICO.
Correct.
Yeah.
Yeah.
So yeah, it's kind of the same thing there. There is a different algorithm. It's super confusing. I think they make it that way so no one can figure out how to play the game. Uh, so yeah, so kind of like that, but a little different. So there's also things like, well, let's talk about like bank statement loans, right? So probably one of my biggest success stories, and I have quite a few of these. Actually, I love bank statement loans. They're easier than DSCR loans in most cases, just as a side note. So a bank statement loan is for self-employed borrowers. And what we do is we look at the most recent 12 months of business bank statements, and we're really mostly looking at the incoming revenue deposits for the business. And then depending on what type of business it is, we can do a blanket 50% expense ratio on it. So for somebody who writes off a ton on their returns, this is great. if you've really got like a 70 or 80 expense ratio, but we go this business bank statement route, we could do a 50% expense ratio on the gross numbers. So, for example, I had a client who was a big time florist, and a lot of expenses, obviously, there with purchasing and staffing and all that kind of stuff. So, on paper, the tax return number after we did the calculation was like 13,000 per month. But when we did the bank statement calculation, it was 163,000 per month of income that we could count for her. So then that's an extreme example, but there's a lot of times this business bank statement can have a drastic difference. So obviously there's another example of your debt to income ratio on a conventional product or one product could look very different than what it is for the bank statement route.
That's awesome, and then that's a good way to do it. I'm sitting here shaking my head, because I'm one of those people. Like, I
Uh-huh.
love my expenses, right?
Yep.
Where you're like, "Hey, this is great."
Yes.
Um, but yeah, that's a great point. Actually, let's have another discussion on that too, where we talk about that a little bit more, and because I know we have a lot of great topics lined up. We're gonna knock out a couple, and then we're gonna keep these going because I think the world that you live in, right, is
Mhm.
very a lot of people, I shouldn't say a lot of them, pretty much everybody's gonna go through that process at one time, shape or form, whether it's for, a primary residence, investment property, etcetera. And I can honestly say that I don't hear a lot of people that are jumping for joy along the whole process, right? And it's probably just because it's very, I don't even know what intrusive, right?
Yeah,
Like by
sure.
nature,
Yeah.
it is if you don't know what you're getting into. And that's
Right.
why we love your approach of it. We've had these conversations, right? Where you're preparing people ahead of time, you're arming them with the knowledge ahead of time. So there's not as many secrets going into it. But
Totally. Yeah.
I know this one, we just kind of scratched the surface.
Yeah.
So I know we're going to dive into this more on some other ones too.
Yeah.
Um, is there anything else you want to add to this? So if this is probably the first time somebody heard that,
Totally.
don't DIY my DTI. Slap on the hand. Say,
Yes,
stop
don't
it. Right.
DIY, just get with a professional. But on that note too, one other point I think is important for this content here. I know everybody's falling in love with ChatGPT and asking ChatGPT all the answers to life, right? The the reason you also can't ChatGPT this, and the reason I have job security, at least for the foreseeable future, is that ChatGPT can only give you the info that it can access online. And these loan products I'm talking about, like this full doc and the bank statement loan, like there's different programs, different products, and these are not public guidelines. So Fannie Mae, Freddie Mac have public guidelines. Anybody can go read their guidelines. But these specialty products, they're internal lender and investor based guidelines. So you can't ChatGPT it because ChatGPT doesn't have access to this info. ChatGPT doesn't know. And so, I know that's kind of a thing right now. And hey, I use it too for a lot of different aspects. But I did actually ChatGPT a Fannie Mae guideline the other day, and it gave me wrong information on that too. So that's why I say just get with a qualified professional when you're looking at debt to income ratio to kind of map out and see what you can do. These products work for primary homes as well, and we can combine them. There's all sorts of different programs out there. So, yeah. So don't save yourself the headache. Don't try to do it yourself. Just get with someone who knows what they're doing, and you'll save yourself a lot of headache there.
Awesome, and we'll drop some direct links, some resource links in the show notes here for anybody that's listening to this on YouTube. If you're on some of the other channels, if you see a little reel or a clip of this, it might not fit in that one, but definitely go to the YouTube channel, that playlist in there, and check it out. So where exactly is the best place that somebody could contact you at if they're getting warmed up to the process, but they really want to know their true DTI?
Yeah, totally. So if you go to my website, it's wealthbuildersmortgage.com. You can click on there. You can set up a call with myself or Aubrey. She's my right hand LO on our Calendly app. And then we can kind of go through all that with you. We will ask you to complete a loan app before the call because in order to work our magic and paint our pictures, we got to have some tools in there to do so. Don't worry about credit. We can do a soft credit pull, so it won't hit your credit if you're concerned about that. And we won't do anything until we talk to you. So yes, so wealthbuildersmortgage.com and set up a call with myself or Aubrey, and happy to see what your situation is.
All righty. Well, I appreciate the time. I love these conversations. And everybody, again, if you're listening to this, if you have any specific questions you want Parker to ask, I mean, you can reach out to her directly. You can send them to us. We're happy to discuss them here too. If you want to hide behind the cloak of invisibility, we're happy to do that. Change your name. Come up with something. This is your chance to create an alter ego. So thank you, Parker, for joining us here. And we will see everybody back here again. The next conversation that we dive into a little bit of tax and a whole lot of lending. Talk to you.